Hello everyone, welcome back. Hope you've been well. Today we've got the regular portfolio update, and I'll talk about one stock in particular which I really believe in long term. To start, we can take a look at some of these numbers. So I'm seeing some very strong growth so far in the portfolio, quite a bit stronger than even I would have imagined, as right now on a whole we're up about 10.5%. This does include the Canadian portfolio, which is strongly lagging down the portfolio right now, as it's been relatively flat. It's a little bit disappointing to me that I can't grow the Canadian as well as the US, but it is still early and we'll have to see what the future holds. Ultimately, it is still a portfolio that I want to try and continue to build. Building a good Canadian stock portfolio will really help reduce a risk that I have in the US portfolio, which is currency exchange. Right now, the US portfolio is going well, but if the exchange rate drops, then my gains will be gone when I convert to Canadian, which I eventually have to do since I plan on using these funds in Canadian. Overall, it's been a very good learning experience. Taking a look at the graph real quick, obviously these numbers are just ported over to the graph. So the Canadian portfolio is still mostly relatively flat. This large increase is purely due to the contribution. And as you can see, the US one is actually growing quite well. For my next contribution, I will be adding to the Canadian portfolio, and that's because most of my Canadian funds right now are being put into a mixture of ETFs and mutual funds. These are mainly held in my tax-free savings account and the RSP. But in my non-registered, which this is a part of, I do still hold quite a few ETFs and mutual funds. And ultimately in the future, I want to be able to amend it so that my non-registered investments are just the stock portfolio trading investments, and my TFSA and RSP will remain in those ETFs and mutual funds. So let's take a look at some of the biggest winners we've had over the last couple weeks. I really want to go over three in particular. So if we take a look at the growth portfolio, we've made a couple additions, and this is so far the performance. We've got my base cost and my current value up roughly about 13,000. And what really kicked off this week was the coin flip stocks, which, if you recall, these are stocks that I think have much higher risk, but also much higher potential. Usually it's because these companies are still much smaller than my growth portfolio stocks, so they've got a lot more room to run. Now, the two that really ran the last little while, you'll see are Fulgent Genetics, which does a lot of testing, and Fubo TV, which is a sports streaming site. They've gone up quite a bit. I've actually sold some of my shares that I've held in them because I feel like they've shot up much too quickly. And so I decided to take a little bit of a profit when they, or if they, come back down a little bit. If there's a significant pullback, I'm looking for at least 10 to 20% pullback off these numbers, I will definitely re-add my shares back in. If not, I'll be happy that I at least took a bit of profit, and I will most likely let these shares run if there's no other pullbacks. Now you may see I also do have GameStop. I've actually been trading this in and out over the last week as it had its huge momentum swings, which I made a video about previously, which you can definitely go check out. Currently, my cost per share on this is $100. The current price is $63.77. Over the last few buys and sells, there's been a total profit of roughly $1,000 that's not shown here. And this share I'm really just leaving for at least the next 6 to 12 months. I just wanted to be part of the club. So I basically bought a stock and I'll leave it there for the next little while. For the growth portfolio, we did see quite a few companies have record blowout earnings. Now, we're talking beating on the top line and bottom line. So there's been some pretty decent appreciation when it comes to the stock price. Some of these actually reported really good earnings though and actually fell because a lot of the growth sometimes is already baked in to the stock price. A couple of these, Berry Global Group, huge earnings, top and bottom, which we'll talk about a little bit later. We had Apple with the most profitable quarter it's ever had. MasterCard, Microsoft, Pinterest, PayPal. We'll talk about a couple of these companies. I'll highlight Berry, PayPal, and Pinterest. I've also added a couple new positions into this portfolio. Mercado Libre, you may or may not be familiar with. It's a stock that's had very good returns over the last few years. The year-to-date chart doesn't look too impressive. I mean, it's still up quite a bit year-to-date, don't get me wrong. But here's where it gets really impressive. You look at the 1 year, the 5 year. 5 years ago, this stock was $91.95. Now it's trading at $1,918. That is a huge multiple, which I don't even have the mental capability to do when it comes to mental math. So you might be thinking, wow, it's already run up, 20, 30 times, maybe, if that math is correct. And I'm still buying into it. Isn't that extremely overvalued? So I would say the key number that I think about when I think of Mercado Libre right now is market cap. These guys are the Amazon of South America. South America has a huge population and it's extremely fragmented, which means there's a lot of tiny little players and there's no one that can really do it as well as Mercado Libre. So if they can become the Amazon of of South America, this 95 billion market cap seems tiny compared to the market size that they have. If you want to take a look at Amazon's market cap, they've got a $1.69 trillion market cap right now. So that is almost 20 times bigger than Mercado Libre is at this moment. Do I think they will become as big as Amazon? Never say never, but I would doubt it. But for them to grow another 100%, 400% over the next 5 to 10 years, I think is certainly within the realm of possibility. Now on this list, I've also added Spotify very recently. I think I actually just bought this today. So I'm down a little bit actually. It's probably the only portfolio or only stock in my entire portfolio that's currently down. But I have Spotify and I also added Paccar. I'll go into a little bit more detail perhaps in a future video what a couple of these companies do like Paccar, because they're most likely a little less well known. Spotify I don't think I'll really get into. But today the ones I wanted to focus on: PayPal, Pinterest, and Berry. So one of these is the stock that I would recommend if you could only buy one stock, it would be that one. First, let's go over Berry Global Group. So for Berry, I've actually talked a little bit before about what they do. So just a quick overview. They just released their quarterly earnings and they beat on both revenue and earnings. So it had quarterly earnings of $1.12 per share, beating the estimate of 93 cents per share. The exciting part, not the cookies. Cookies are not exciting. The exciting part about Berry is that a year ago earnings were only about $56 per share. So profitability is really growing. Revenue was $3.14 billion, surpassing estimates by roughly 8%, and revenue a year ago was only about $2.82 billion. Berry's a really boring recession-proof company. They're a flexible packager. They've got tons of different markets, and they make a ton of different plastics. Recession-proof because plastics are, although there is starting to be a war on plastics, and Berry is investing into innovation when it comes to plastics and being green, it's recession-proof because right now everything is pretty much being shrouded in plastic. So Berry as a company is actually a very boring company. which is not a bad thing when a lot of the portfolio that you can see involves more higher risk tech or biotech plays. A boring plastic company that grows continuously and has stock appreciation is not a bad thing. If you look at the last 6 months, it's actually been a little bit more bumpy than I would have imagined. But if you look at the year, besides the big drop here in 2020 around the March-April time when everything crashed, it's been a pretty steady incline. Going forward, they offered and raised 2021 guidances, which means that the company said, we expect our company to grow by X dollars. That's pretty good news because COVID is still affecting the global economy pretty strongly. But the fact that they're able to offer a raised guidance and increased profitability should bode well for this company long term. Next, we've got PayPal. PayPal reported earnings on Wednesday, February the 3rd. Now, PayPal should be a pretty household name as it's a big player in the fintech and payment solution space. You can see I've got roughly about $588 in total appreciation so far, and I haven't held the stock for very long. So the appreciation that I've seen has been almost 20% since I've purchased it. According to their earnings report, PayPal just had a record 2020. So in their history, they have never done as well revenue-wise or profitability-wise as they did in 2020. Part of that is likely due to COVID, you would think, as a lot more electronic transactions likely took place. But PayPal actually offered 2021 guidance as well, and they've raised their revenue estimates and earning estimates for 2021. So it doesn't seem very likely that PayPal's success in 2020 was purely due to COVID. What's also really awesome for PayPal is they are always wanting to be cutting edge. So they are investing fairly heavily into the crypto space. They're creating a business unit specifically for crypto. Now, whether crypto works out or not, nobody really knows. But the fact that you've got a super large company like PayPal investing heavily into this unit bodes well for cryptocurrency in the future. It'll have to stabilize to be a secure form of payment, but at least for now, the fact that it's got a large company really investing heavily into it speaks volumes as to how it might turn out in the future. Now, PayPal's also got a couple subsidiaries. A couple really well-known ones. You've got Venmo and Honey. Venmo, really popular, easy way to send money, kind of like an e-transfer. And then you've got Honey, which is basically a online add-on to your browser, and they will look for deals for you when you're shopping. So if you're on Amazon, or if you're on, let's say, Gap, or, insert a random company here. Before you purchase, you can click on the Honey add-on, and it'll look for coupon codes. Sometimes if they're partnered with a specific company, you can get points for shopping there, and you can trade that in for other rewards further down the line. These other companies kind of expand PayPal's global reach. They operate in Europe and South America, and they're more point-of-sale solutions. Think of your Moneris's, your Chase from JP Morgan, those kinds of things. Last but not least, we've got Pinterest. If there is only one stock you can buy right now, and you're able to hold for the long term, I think Pinterest is the one to get. Like I said, though, this is under the huge caveat that you can hold for the long term. So we're talking minimum 3 to 5 years. A brief overview of Pinterest. Pinterest is basically a social media platform and an online image platform where people can share what they like, and if you like the post, you can pin it or save it to your profile. Now Pinterest's mission statement is basically to create inspiration so that people can live the life that they love. And if you think about it, when you're on here, what you're seeing is things that you're interested in. It's seeing products that you're interested in. It's seeing, for example, perhaps some interior design ideas or little DIY projects. And these are all things that can really improve your life and especially give you ideas on how you want to live. So I think that their mission statement is extremely wholesome, but also not fluff. It is actually extremely on track for what you can use this platform for, which when you think about other social media platforms, it doesn't really give you the opportunity to do that. To top it all off, they've also shown large, significant user base growth as well. So to break this down a little further, their numbers in the US are $3.85 per user, but only a mere 21 cents outside the US. And nearly 80% of Pinterest users are actually from outside the US. So over the past 12 months, they've really started to aggressively invest in their international presence and get some staff on the ground. They're going to start with focusing on the English-speaking countries and then move on from there. The main benefit, or another cool benefit actually, that Pinterest has right now is that unlike Twitter and Facebook, they're not part of any controversy. They aren't required to be part of any Senate hearings, as right now they're still a little bit too small to be noticed. So they don't have to go through any of the controversy that Facebook and Twitter have to deal with. And the best part of Pinterest right now is, as you can see, when I scroll through this, you're seeing a bunch of images and perhaps they're user, uploaded, but they could totally be advertisements, right? When you're scrolling through a feed like this, compared to other social media channels, advertising does not become intrusive of your experience. So advertisers could really load up and, put their products and experiences on this platform. And if Pinterest starts putting on easy links where once you click on it, there's a direct purchase, which I actually think they do for some of these. I mean, this takes them to the site, but I'm talking about something even more direct, where you can click onto this and there's just a purchase button right there, right? How easy would that be, and how valuable would that be for manufacturers to now advertise on Pinterest? So, like I said, the magic number for their ARPU right now that they've got is $1.57. Facebook, $7.89. Snapchat, $2.73 and growing, and Twitter, $4.50. Even if Pinterest gets to the middle, which is roughly around $3-4 right now, that's a significant, 250% growth in revenue, right? So as far as the monetizing potential and the growth potential of this company, I think it's really limitless. If you think about long-term outlooks, it's got right now roughly a $40 billion market cap, which is 1/20th the size of Facebook. To see it growing, even to half the size of Facebook, implies that this company's stock price at least will appreciate, at least 5 to 10-fold. So I really like Pinterest right now. The valuation is actually a little bit high considering where they are right now in the company. They're trading at significant valuations for price to earnings and price to revenue. So if there is any falter in execution, there certainly could be a quarter or two where you see the price of Pinterest come down a little bit. But long term, I really think that this is the place to be. And like I said, it's really important to specify long term. Even if you look at a competitor perspective, no one is really doing it like Pinterest is. Instagram is doing something kind of similar, with where you scroll through the feed, you can see the, people's posts. But this is really more geared towards lifestyle. And there's not quite a platform right now that does it anywhere near as well as Pinterest does. So like I said, I really think that if you want a stock to buy right now and you're able to hold for the long term, I really think Pinterest is the way to go. Anyway, thanks for taking the time to listen to my channel and to follow along with the portfolio updates. If you liked it, it'd be awesome if you left a like or subscribed. Maybe leave a comment and let me know what other companies that you guys would buy and hold if you could only buy one stock. And I will talk to you guys next time. Thanks.